Bill, it's brilliant to get you back. You're one of my favorite people in the world to talk through big stuff with. And I think the interview that we had about a year ago, I think was one of my favorites of all time in the history of Real Vision. So no pressure on you this time then.
Thank you, Raoul. I'm delighted to be here. And the timing of our last talk was fantastic.
It was. So listen, what I'm trying to do is I'm trying to think through this hypothesis that I've got. And I know you're exactly the right person to think through this with, is I'm looking ahead and I'm looking at the amount of disruptive technology that's not in ideation phase, but in rollout phase, whether it's autonomous vehicles, whether it's EVs, whether it's distributed computing, whether it's cryptocurrencies and digital assets, whether it's genetic engineering or genetic vaccines, or, there are so many things that are kind of all in acceleration or exponential phase that I'm just getting a feeling that we're about to go through a period of change almost unparalleled in human history. I don't know, this is a very big way to start a conversation, and we'll talk about valuations and markets and all this stuff, but what do you think? Because you've been on the ground and looking at this for a lot longer than I have.
I totally agree with you. I think we're seeing sort of a bifurcation of the economy. And you've talked a little bit about platform companies, which has been a phrase inside the tech world for a long, long time. So I'm going to mix a couple of things here. One is kind of what makes for an exponential valuation relative to the old stuff, and what are the business models that sort of hyper fuel that. So obviously we're in this kind of tech cycle, or not just tech cycle. We are in a market cycle that the world hasn't seen before ever, with interest rates where they are, PE multiples where they are. So those multiples are going to richly reward things that have high growth. And they'll also richly reward things that have high growth in big markets. So from a tech perspective, I think what's happened is that we've moved from kind of smaller disruption, very disruptive still, but smaller disruptor into like small hardware markets, into massive, rapidly scaling disruption in consumer markets. So if you think about what tech was like when I started in the 80s, it was a world of reshaping the path of electrons in vacuum tubes, so silicon. And yeah, there were some good sized markets there, but the rate of change was slow because it was physical production of things. And then it moved to kind of, a little bit more hardware devices, software, and then it was all B2B. It was all technology being sold to technologists. Now, when there's a technology change, it can hit 1 billion consumers in a matter of months. That wasn't possible before. So you have this combination of the market effects rewarding things that grow. You have markets that are exponentially bigger than they were 20 years ago. And then you have rates of growth that are like 100 times faster than they used to be. It's all kind of adding up to what you're talking about. And you mentioned platforms, so I think there's a total change in the type of company that exists today. And I remember when I was in the silicon business, I'd marvel at companies like Microsoft, because their market cap per employee was 10 times what ours was in the silicon companies. And I'd be like, why is that? And of course they had the margin structures they had, but why did they have those margin structures? Part of it was kind of monopoly positioning and all that. But part of it was also, if you think about the architecture of a company that is, quote, a platform, the market cap per employee doesn't count all of the people making a living and adding economic activity to that platform company that are not on the payroll. So, for every person in the world of Adobe, every person in the world of Microsoft, there's 25 to 100 people using their tools, making a living, contributing to that ecosystem. And it's moved, the boundaries around where the contribution happens have now expanded. So now you've got this whole world where there's, zillions of people in open source adding value every day that accrues to certain companies. And those companies have very few employees per economic activity.
And that is almost the definition of Metcalfe's law. It's the number of users and the value that the users add to the network that makes these things so incredibly valuable. So we've gone from an age of producing a product and selling it to a market to creating a platform that allows everybody to either create economic